Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Friday, December 8th. Well, coming up for today's action on Friday with unemployment, a lot of the things we're going to be talking about today gives us an idea of how people may be positioning themselves before these numbers come out today. There's going to be a lot of focus on them, and the bottom line is it's 50-50. How this market's going to react, which way it's going to go, what we expect to see on the unemployment. To tell you the truth, from my perspective, it just doesn't really matter. It's going to be the perception of what people think it means. And again, you and I have seen markets go down on bullish numbers and up on bearish numbers. And we have that potential for today. But the NASDAQ, I think, let me just blow this up a little bit. The NASDAQ market is really positioned itself for a buy. This level right in here could be a buying opportunity, and if we were a buyer there, it's got to be positive by the end of today. I mean, these indices look like, buyers are still coming in. What we didn't see before this number day is everybody backing away from it. Big shadows on the top or something like that. Even in the NASDAQ, as the market broke, buyers came back in. We're still inside this benchmark candle. These have a bullish bias to it. So if we had to pick a side, I would say thumbs up for all these indices. Now let's take a look at the currencies. The euro continues to struggle. Made new high, would have created a buying opportunity, and it failed. That would also have created a loss for that trade as well. Swissy did reach magnitude objective to the upside. A break even as it came back down, and right now we'd still be in that zone. As it pops back through that buying opportunity, it sets up that buy again, and we're looking for a movement to the upside, but I still think that it's kind of 50-50 in this area too. Sorry to be so wishy-washy, but the reality is when you're coming in to what we're coming into for tomorrow, some of these setups are not that clean, even though they may look it. Like the Japanese yen. We are looking for weakness in the yen. This market, we're looking for these guys to back off a little bit more. Now, this market here did reach magnitude objective before a scratch. And right now it's in the neutral zone. The Aussie, this guy is finding some sellers too. This is bearish. Now, we had that a couple days ago too, didn't we? That was bearish, but there no follow through. Here we're seeing a little bit of that in the current time zone that we're in, which is Asia. But the real key is going to be the first couple hours, of our session in the United States, when the numbers come out and people can react to it. Can't wait to see what happens. But the Aussie has a bearish setup there. British pounds, I think this one's also 50-50. Even though we saw sellers coming into this market yesterday, you look at where we found buyers before, we are right there at 159. This could easily pop up from here. Canadian dollars, also the same thing. We've gotten high enough to see this loss of momentum. We got to respect that behavior. That is bearish coming into today's session. And if we move on to the interest rates, well, the euro dollar is kind of plodding along up here. We're kind of consolidating. I think this is 50-50. I feel the same way about the notes. I mean, the position that this market has, it did make an attempt to the upside, did not reach magnitude objective, would have created a loss, had a losing trade for that situation there. The bonds, on the other hand, did reach magnitude objective on both sides of that market. So, or I should say on the downside for that market. And but again, the setup, is it bearish? Yes. Does it look like we expect weakness in the interest rates today? Yes. That being said, I think we need to be very cautious about having a strong bias either way. And when it comes to metals, let's talk about those guys next. Gold, we backed off a bit. Same thing for silver. And the same thing for Mr. Copper. Came very close to this sell point. I still think it's I'm more inclined to buy the breaks from a swing trade point of view. But if these guys want to back off, I want to be on that side of the fence. This is bearish as far as setups go and what we're looking for today. But again, I'd be very cautious about being too aggressive, although these sell points are relatively aggressive. Now, let's go over to those interest rate markets. Here we're seeing the crude oil market did back off a tad bit, and we are looking for another push back to the upside, but I think we got to be cautious. This is not healthy the way this market made this high. Yesterday's action should have been not necessarily positive, but we needed to see a close towards those highs. It tells us that buyers are still kind of in play there. And here we're really not seeing that. So not a good sign, actually. Natural gas, this guy is swung on both sides of the street. As I mentioned to you yesterday, day before yesterday, for this action, it just does not look healthy. And it's still the case. I mean, look at this. Then we make new highs, we back off. You know, there's just no confidence in this market right now. And that's what we need to see if we're going to see a trend beginning and continuing, I should say. So it's right back in the middle of this neutral zone that you and I have been talking about now for a couple weeks. Whether today will be the excuse for that market, again, I just don't see it being that clear. Beans, I'm showing you this on a 60-minute chart. You know, these are the opportunities that we see for this market. This is the sell point for that market, and right now this would be the buy point for it. And we're looking for kind of an unchanged day in beans. We're not looking for a dramatic move down or a dramatic move going into the weekend. Corn, sideways type market. That would be expected, most typical kind of behavior for today's action. And for wheat, this did trade through that sell point. So from that buy point to that sell point, that difference is $850. That would be the dollar value of that move. And right up here, if this gets up there, we'd want to be on the buy side. Well, this concludes today's market studies. Can't wait to see what happens next. Looking forward to being with you again. And in the meantime, take care.